Good afternoon. This is the course call operator. Welcome to Tinexta's full year 2020 consolidated results presentation. Let me remind you that all participants are in listen-only mode. After the presentation, a Q&A session will be held. To be assisted during the conference call, please press star followed by 0 on your phone keypad. Let me now turn the conference over to Mr. Oddone Pozzi, CFO of the group and IR of Tinexta. Mr. Pozzi, you have the floor. Thank you very much. Good afternoon to all of you. Thanks for joining us in this conference call. As you know, this morning we had a board meeting, Tinexta SPA's board meeting, and we do apologize because only a few minutes ago did we complete the board meeting and approving the full year 2020 results. And we've also uploaded the presentation, so if you want to download it, we can share it with you. So 2020 performance, let me confirm that it is fully in line with what we presented to the market on February the 23rd, but we will walk you through it with much more detail, with a greater level of detail. In 2020, as you know, we had some distinctive results, outstanding results, and you will appreciate them as you see our peers, listed peers, will be issuing their results. So we've proven to be highly resilient in all of the companies where we invested against a complex backdrop. In addition to that, we identified a number of business opportunities that were generated, that came up, and that, of course, were also the consequence of some criticalities that came across because of the COVID situation. And we've immediately come up with solutions to submit to our clients. And also, our revenues and EBITDA figures went up too, kept growing. As we also we had a speeding up of our growth, and we deleveraged in excess of the expectations we had. And as we had also shared with the market, we also retained our leadership position in digital trust and innovation and marketing services, and also we recorded a sizable growth in credit information, which was an industry that showed a not very positive trend, and yet we retained a positive performance. Let's now move on to page 3 in the presentation. You see that revenues are going up 4%, and 9.3% is our assets. And then if you look at that P&A, we have a net profit of 38 million and a 32% growth. So results that are in line with the guidance we provided. And so we have EBITDA margin close to 29%, and adjusted EBITDA 81, and a net profit around 40 million. This is confirmed in the following page. So the trend we have been witnessing since the listing, we were at 76 million. Indeed, we also managed to grow through acquisitions, but revenues are 269 million, and EBITDA, we are still growing with a CAGR close to 40%, and debt that we had to, the leverage we had to use to grow through acquisitions in 2020 was dramatically reduced thanks to our cash flow generation abilities, and despite a number of one-off transactions that we've already started, NFP is below 92 million with an NFP on EBITDA ratio that is around 1.2 times. If we look at the P&L, we see an improvement. Let's take EBITDA before the stock option. It's growing from 28.9 to 29.3%, and indeed there are some items such as personnel costs that are slightly increasing. However, we are a service company, and therefore the more we increase our headcounts, of course, the more services we provide. Despite that, on a like-for-like basis, without including stock options, we have a further improvement of EBITDA from 28.9 to 29.3%. And this year, we launched our business plan last June. And last year we were relying on a different business plan, and so we had also included the phantom stock option cost, and then appreciation and D&As. We provided guidance. There were a number of investments we were engaged in with relevant depreciations and amortizations. It was fully under control, and that leads to an EBIT close to 20%, and then the financial management, in addition to contracts we had, and we managed to get better conditions on those contracts, especially as far as rates were concerned. That led to a further improvement in our figures. About 1 million proceeds, to which there must be, we have to add another couple of millions, always proceeds from the disposal of Lux Trust at a value that was very close to that of the investment we made. And then, of course, we'd recorded 2 million losses, but once we've completed the Lux Trust disposal, everything went to the proceedings line. Profit before taxes is increasing sizably, 19.5%. Taxes are growing versus the previous year, and the pre-tax profit is not something we can see slightly directly on the screen, but we had a 600 million worth of patent box and 700 million. We did not pay in the IRAP settlement as per governmental provisions. And then net profit on revenues and in excess of 14%. As you can see in the following page, you see the results split or broken down per business unit. There are a couple of millions of costs we had to bear for M&A deals that we completed from the end of September until early this year. Digital Trust is up 8% on revenues and 5% EBITDA in that area. In this area, in 2020, we have completed a number of investments, and that will enable us to generate better results in the coming years as per the guidance we gave you. And then let me remind you that Credit and Information Management, the group, has really proven that in a very difficult situation, we've managed to come up with solutions. And indeed, we did encounter difficulties also on the Revaluta side. where there are requests for loans, and therefore we had to come up with appraisals. We had a shrinking of the operations, and then we've recovered. So credit information, the services we are providing, and we outsource, we are the outsourcees for the 662 law, and the guaranteed funds, the state guaranteed funds, enabled us to acquire more market shares, especially vis-à-vis our banking clients, and that, of course, was translated into a sizable EBITDA growth, up 36%. So EBITDA margin in this business unit lands at 30%, 30%. So a sizable result again. Innovation and marketing services. Here we have an area where we have co-mark activities, so advisory to exports activities that we provide on a good scale to our clients to support their actions to sell abroad, to export, and in some cases they came to a standstill because of the situation, but then we managed to find new ways. So we lost part of the top line there of the turnover, but then we also have the warrant service that is generating margins, and that was flat. That played a role indeed. EBITDA it was flat. If we compare it to 2019, that had benefited from some delays, deferrals in activities between 2018 and 2019, and we've already mentioned this in the past. So warrant to manage to have a positive performance, because especially warrant, 50% of the EBITDA is generated by them. And our free cash flow had a leap, a meaningful leap forward, because in 2019 we had a sizable working capital absorption, so we've more than offset that by managing through credit management and working capital, and also having an excellent performance in services provided with advanced payment. So that really gave a strong boost to our cash generation and have made our guidance much stronger and much sounder as far as those data were concerned. And then the NFP, net financial position, there was a decrease there, and the M&A activities led to an absorption of about 12 million, and then another 10 million that were invested to buy our own shares for the stock option support. In the following page, you see a very sizable portion, a very sizable piece of information. We have free cash flow, and then we have the disposal and acquisitions of our own shares. And then there are other items that are showing a stable performance. The board of directors approved a dividend payout, and the dividend payout is based on 2019 results, and during the lockdown there was no proposal to pay out dividends to shareholders, but the group now is back to paying dividends out now. It went from minus 0.23 to 26.26 euro cents per share, keeping a payout ratio that is higher than 30% versus 32 in the past. So we are around 12 million. The group, as we know, towards the end of 2020, as you can see from September onward, completed a number of transactions when it comes to the changes in the consolidation scope. The bigger chunk comes through the acquisition of 3 companies, 3 vehicles, and Chioroi, Corvallis, and Swascan. And in the cybersecurity segment, which has always been a pillar in our offering, in our proposition. And then we also acquired Querio in the innovation and marketing services area that will enable us to enter, to access digital marketing, the digital marketing arena, so that we enter a high-growth industry, and also completing a co-mark offering and becoming a benchmark for digital marketing activities throughout the group. That was completed in January, so both cybersecurity acquisitions and Querio will be consolidated starting from January the 1st. Swascan was consolidated in October, but that's more or less it. And then we entered 2 more transactions. We acquired minority stakes, meaning Autada in Digital Trust, and a minority stake. It's a German player, and we'll have the opportunity we have a call option to increase our stake, so we'll do so once the company proves that they have started performing well. And then another investment, it's a limited investment, but it's opening up, it's paving the way to getting our positioning in France too when it comes to innovation and marketing services. In the following page, you see a new development for the group. In addition to the 3 business units, as of January, we add cyber security. So if we now look, as already mentioned by the board on February the 23rd, and then reconfirmed by today's board, we are going to focus on the number of product and services, innovative product and services we offer in all of our business units. We are going to work to further improve and maximize our operating efficiency, increasing our EBITDA margin, and that's another objective, another goal we want to achieve. And then we will very much focus on our cash-generating ability, so that we can further invest to increase, to broaden our consolidation scope. As we've already shared with the market during the conference call, this is one of the main axes along which we will be rolling out our strategy. And in 2021, considering the changing consolidation scope that I've just mentioned because of the acquisitions we completed, based on the new consolidation scope, we'll have consolidated revenues 370 million, EBITDA 96 million, and we plan to retain the NFP on EBITDA ratio around 2 times. That's it as far as I am concerned, and we are, of course, I am now ready and available to take your questions or any clarifications that you may require. This is the Chorus Call operator. We shall now start the Q&A session. Whoever wishes to ask a question, please press star and 1 on their phone keypad. To be removed from the Q&A queue, press star and 2 on your phone keypad. Please ask your questions using your headsets. Thank you. If you wish to ask a question, press star and 1 now. The first question comes from the line of Isacco Brambilla with Mediobanca. Please, sir. Good morning. Well, good afternoon to all of you. I have a couple of questions. The first one is on the authorization for capital increase to 100 million to get the clearance going forward. So why is that? Could you elaborate on the reasons for this board resolution? And then could you elaborate on your point of view on the acquisitions performed by Ion Capital? The acquisition of Cedati, how comparable are the services provided by Cedati or the ones offered by Tinexta? Very well. Thank you very much for these questions. So first of all, for sure, the board of directors today resolved upon two main topics. You mentioned the clearance for the proposal to have a mandate to increase the share capital up to a maximum of 100 million with share premium issuance, share premium shares issuance. Sorry, premium share issuance. And that's the group strategies because we wish to have all the necessary tools, or as many tools as possible, to really support the growth of our group through M&As. External growth of the group. That is one piece of the puzzle that we will have available provided the AGM approves it on April the 27th. So that will mean the BOD will be able to execute in a much faster way, and we will be leaner when it comes to making operating decisions at group level as well. And then another topic that was resolved upon by the board of directors and that will then be submitted to the AGM for approval, that was the item concerning the share premium or the of a specific type of vote. A second question, you were referring to services like by Cedati. How are they comparable to what you are offering as Tinexta? Cedati and Tinexta, it's different services we're talking about. Cedati is providing services to the banking universe. And with Digital Trust, instead, we provide different services. With Digital Trust, we are focusing on Cedati's services for the banking world, operating services. With the Digital Trust and InfoCert, we are focusing on digital transformation processes. Not IT services, not information technology services. So we have off-the-shelf, we have electronic, digital, PC, and what is also growing sizably are digitalization projects that we sell to our clients, also including the projects I've just mentioned, but they are helping our clients to move from a more conventional situation to a lightweight, paperless type of process. so that they can operate in a lean and efficient way. That is not what Cedacri is doing, and Cedacri at times they are our own service supplier. They supply services to us. And if I may, on service information and business information, do you expect any changes in the industry with the changes we've seen involving one of your main competitors over the last few weeks? Well, indeed, that deal, the deal we've seen on the market was sizable, and this is a segment that overall is showing a trend with different rates from the other three industries where we are involved and invested in. In this sector, in this segment, I think. And the fact that we were very good in generating results in 2020 proves that we were ready to take action and to identify opportunities, business opportunities for new services to be offered to our clients, because it's a segment that was quite flat. It did not have an implied growth as many others, so it was somehow at a standstill, and now we've managed to provide other services. And as we said during our business plan presentation, we want to retain and even grow the positions we have acquired over 2020. So that is very important. And on the more conventional part of our credit information business, in our business plan, we expect to improve our performance on the most conventional activities as well, and that is a major challenge to our management, and we're all confident, however, that we can face up to that challenge. Thank you very much. For further questions, please press star and 1 on your phone keypad. Let me remind you that if you wish to ask a question, you can press star followed by 1 on your phone. Mr. Pozzi, for the time being, there are no other questions in the queue. Maybe we can wait a minute or so, a couple of minutes, to see if there are more questions coming in. So far, I still confirm that there are no questions in the queue. I would like to thank you very much. I thank all those who have attended our conference call, and we'll talk to you again when we disclose Q1 results and the new group setup. Thank you very much, and thanks for joining us today.